Hey guys, today's video is going to be absolutely awesome. It comes from a question from our audience, right? And it's this. What's the difference between a hard money lender and a private money lender? Or what are the differences between a hard money lender and a private money lender, right? And I'm going to absolutely tell you this because I've asked a lot of y'all to send in questions and comments below in these comment boxes on what you want us to film, and we're going to do that for you. So this question is for you know who, right? And there's a lot of differences, and I'm going to kind of explain them for you, right? Because this is very important to understand, because you don't want to pay more for your money than you should, because a lot of your money is being lost by paying high loan fees and high carrying costs on your next rehab, right? So let's kind of look at it like this. All hard money lenders can be technically classified as a private money lender, but not all private money lenders really can be classified as a hard money lender, right? You can kind of hear that saying out there circling the community. Now, a lot of y'all are like, I don't know what a hard money lender is or private money lender, so I'm going to kind of give you the breakdown and kind of my opinion on it, right? So I look at hard money lenders as professional lenders. This is their job. They're money brokers, right? And they're usually raising money in a fund, or they're raising money per individual project and brokering that money for that specific house or that deal, right? Whereas a private money lender, the ones that we're looking for, the way we most traditionally talk about a private money lender, they are just a friend or a family member or someone in our community that we've come across through a networking relationship that's going to loan us the money on simple debt financing or through an equity partnership, right? If you don't know the difference between debt financing and equity financing, go ahead and check out our other video that we filmed just a few days ago on that. So we're going to go through and kind of knock out a lot of these questions for financing and loans for properties, right? Because a lot of you have questions on this. So that's basically how I see it. A hard money lender is a private or a professional lender, and private money lender is not so professional, but they're just trying to put their money in a better place than working in the stock market or in REITs or whatever they're going to do. So what's the main difference between a hard money lender and a private money lender? Well, I think this is one of the biggest ones, right? So a hard money lender is going to charge points up front. Now, what's a point, right? A point is a percentage point. So let's use a $100,000 loan, for example, and you're borrowing 12%. So what do you mean? Well, you're going to pay $12,000 a year for that loan. 12 percentage points into 100 is $12,000, so $1,000 a month, right? So a hard money lender is not just going to ask for 12%. That's what a private lender is going to do. They're just going to get 12% simple debt financing. Whereas a hard money lender is going to ask for points up front. So you may traditionally have come across individuals that say 2 and 12 or 3 and 14, or I've even seen up in some parts in the Northeast, in the Carolinas and up there, they're asking 5 and 15, which must be a crazy market up there, because I don't see how anybody would pay that down here, but that's what's going on. So what do they mean? Well, my lenders charge me 2 and 12. So that means I'm paying 2 points up front and 12 points on the backside, right? So if I borrow $100,000 at closing, I'm going to have to pay that lender $2,000. And then over the course of the loan, it's going to be 12% or $1,000 a month. So if it takes 4 months, it's $4,000. 6 months, it's $6,000. And that's kind of how that works. Private lenders technically do not ever charge points up front. And if they do, they're usually a hard money lender, right? So that's kind of how that works. But also, a hard money lender is going to typically charge you what's called an origination fee. They're going to have extra fees worked in, right? Because they're trying to make as much money as they can. That's their business. They're trying to pump out a lot of loans and get a lot of money through brokering these deals. Just like you would do a wholesale deal, that's the same type of mentality that they have here. We're trying to get commissions per property, right? So they're trying to do as many as they can. So my lender typically charges me $1,500. So on a $100,000 loan that I'm borrowing 12%, I'm going to pay him 2 points up front and $1,500 in origination fees. So that's $3,500 that he's getting just to broker that loan, essentially. And then I'm going to pay him $1,000 a month. So if it takes 6 months to do it, I owe him an extra $6,000 or $9,500, right? Borrowing $100,000 for 6 months from my hard money lender is just under $10,000. That's not cheap. Now, why do they charge points and origination fees? Well, because they can, because other people come to them because they can't get loans anywhere else. But also, they raise money from other investors. They got really good at raising money. A lot of hard money lenders were originally rehabbers, and they got good at raising money, and then they said, let's just broker the money, right? Because it's a lot easier than doing that work themselves. So they go out there and they raise money. Their goal is to raise it as cheap as possible. Their goal is to raise money at 8% and loan it out at 12%, right? And create a spread between 8 and 12, just like the banks do, right? They borrow your money from your savings account at 0.25% and loan it out at 4.25%. So they're trying to do the same thing. But what if they can't? What if someone comes to them with $1 million and is like, but I need 12%? Do you think they're going to turn them away? No, they're going to keep that money because they're still going to take that money at 12% and loan it out at 12%, so it washes out, right? But they're going to broker it and they're going to get those points up front. And so if they're in a market where they get 3 or 4 points up front, they're still making good money to do those deals. So that's one of the biggest things that I commonly see the difference between a hard money loan, or hard money lender, and a private money lender is the points and the origination fees up front. Because if you're borrowing money from your brother or one of your college friends, they probably don't even understand that you can charge points up front, or there are origination fees, right? So that's typically not something you're going to see from a private lender, which is a benefit to working with a private lender. Because I'm going to show you all the benefits to work with a private lender over a hard money lender, and there's a lot of them. So here's the next one, right? You have skin in the game. What does that mean? Well, guys, a lot of y'all think that you can just go borrow the money and you don't have to bring any money to the table. That's not true. A hard money lender is going to require that you leave skin in the game, and usually about 10%. Not all do, and some have varying amounts that they make you leave in. But typically, like if I was to borrow $100,000, I'd have to leave around $10,000 into that project, especially if I'm new with a new hard money lender. It's their security, right? Just like when you have a new rental property, if you take a first month's security deposit up front and you hold it in case they damage the property or they run off, right? You have a little bit of protection that you can keep that money. That's what they're doing. They're keeping that money in an escrow account in case you run off or something goes bad. It's their protection, right? But you'll get that money back at the end of the project. But you still have to pull that money out of your pocket. Whereas a private money lender, they're not going to ask you to leave that skin in the game. They're just going to loan you all $100,000. So say you're borrowing $100,000 and $70,000 is for the acquisition of the property and $30,000 is for the rehab. They're just going to give it all, and you're not going to have to leave anything in there. So that's a huge benefit, because on one, you have to bring $10,000 to the table, and the other, you don't have to bring any money to the table, right? That's a huge advantage of working with a private money lender, and you have a lot more flexibility working with them and negotiating things. Another benefit to working with a private money lender versus a hard money lender or a professional lender is this, guys. They're not going to ask you to follow some real regimented or stringent draw process. Now, what is a draw, right? So a lot of people that are getting into the business, or new wholesalers or new investors, are thinking that they're just going to go borrow all the money from the hard money lender, and they're going to get all this rehab money up front, and they're just going to go do the rehab. That's not how it works. If you borrow from a professional lender or a hard money lender, and you borrow $100,000 and $30,000 goes to rehab, they're going to keep that $30,000 back, and they're going to hold it in an account, right? And you're going to have to go fund the first little bit of that project. So you may have to go fund the first $4,000 or $5,000 and come back to them and show them that here's the check stubs from the labor, here's the receipts from the materials, and here's pictures to show you that I did the work, right? And then they're going to give you a reimbursement, right? So you spend $5,000, they give you $5,000 back. Then you go fund the next $5,000, they give you $5,000 back. And it goes back and forth, back and forth. So you're going to need money to fund that. Whereas a private money lender, it's pretty typical that you can just go borrow all $100,000 and you get at closing a check for $30,000, right? Where you can just go do whatever you want with it. Now here's the problem. That's not safe for that lender. So guys, if you're doing this in the lender position, make sure that you have some type of person that you're working with that you really trust, or that you have a very good equity position in that property, that if you take it back, you can still sell it and get your money out. Because a lot of people get in trouble, and you hear about these stories about people borrowing money from a private money lender, getting all that rehab money, and then going robbing Peter to pay Paul. So they're behind on a couple of the other projects, so they borrowed extra rehab over here so they could take it and try to catch up with those other projects, and then it gets kind of like a Ponzi scheme for them, and it becomes a house of cards, and it all collapses in, guys. If you're a rehabber, do not chase money with other properties' money, because this is how you go out of business. This is how things catch up on you. I know you think you're smart, and I know you think you can handle it. It never happens. It happens, you get away with it for a while, and then everybody falls. It just catches up to you. You can't shuffle those, or keep that house of cards up forever, right? So that's the risk of a lender, being a private money lender. Don't give out all that money. So like if you're loaning on a house where they're paying $40,000 and there's $60,000 in repair, don't give them all $60,000 up front. It can be very risky for you, and you can get into a bad situation. But that's the difference, right? The other thing is with hard money lenders, they're going to charge you a lot of times an inspection report. So they may not take your pictures as the gospel, right? Because people get pretty good at making pictures look like, that there's a lot more work done than there really has been. So they may require that inspection comes out each time you get a draw. And what are they going to charge you? An extra little $100 or $200, right? Or whatever their fee is. So guys, if you're working with a lender and they have all sorts of fees in there, they're a professional hard money lender. Private money lenders do not have that. Private money lenders just simply do this. Here's $100,000, pay me my interest rate, either monthly, quarterly, or at the end of the project, or however you agree to do it with them. And that's kind of how that works. So there's a lot more stringent process working with a hard money lender. You got draws, and you have on the front side getting qualified. You're going to have to get credit checks, and they're going to have to go through a lot more, a lot lengthier process where they're kind of interviewing and trying to figure out who is this random person I'm going to lend money to, right? Whereas over here, if you're borrowing money from a college friend, they're not going to ask you any of that. You don't even have to worry about that. You could have a bankruptcy, foreclosures, and credit issues, and they'll still lend you that money as long as they trust you and know you. So we already talked about the money in the game issue. That's a big issue with private money lenders versus hard money lenders, is you don't have to bring as much money to the table. Because here, look at it like this. So as a new investor, I used to think, well, I want to start flipping houses and make more money, and these wholesale deals are nice, but I want to make bigger money, right? So what did I do? I started looking for a deal because I was going out to the clubs, and they'd all say, hey, if you find a deal, we'll lend 70% on it, right? So we'll loan 70 to 75%. So I thought if I could find a house for 45 and put 25 in it, that they would loan me all the money. And I was like, I don't even need to have any of my own cash, and I'll make more money, and so I'll just find a really good deal, and they're going to fund the whole thing for me. That is not how it works, guys. These hard money lenders are not stupid. They make you leave a lot more money in there, right? So let's take a typical deal where you have a $100,000 house, right? And you go and you're in at a 70% leverage position. How much money are you going to have to bring to the table? Well, a lot of them are going to make you leave 10% of the game. So there's $10,000 out of your pocket right there. Then you're going to have 2 points up front if you're using my lender. So now you're $12,000 in. Another $1,500 for origination. Now you're at $13,500. That's a lot more than having no money in there, right? But you're not even done yet. You got closing costs to close that deal. You're up into the high teens, right? Or you're starting to creep up. But you're still not even done. You're going to have to fund that first draw, right? You may have to spend that first $3,000 to $5,000 before you get a kickback or reimbursement. So you may need $20,000+ to do your first rehab, guys. And you want to make sure you borrow enough money, because what happens is a lot of times, how often have you seen those houses where somebody calls you and they're like, I just need to sell this house, and you go and it's like 3/4 rehab and you can't figure out why they stopped, and you're thinking there must be something really wrong with this. Well, there is. That person didn't borrow enough money, and they didn't have any money to finish the project, and they got stuck, and that project got stopped, and they couldn't finish it out, and the hard money fees are kicking in, and they just have to try to dump the property and get out of it. So that's what's happening in those situations. So you're going to have to bring over $20,000 to the table using a professional lender, whereas if you borrow $100,000 from a private money lender in this situation, say everything was, you were only borrowing really 95, but you borrowed 100, because you can even wrap in the closing costs and everything. A lot of times, guys, I walk away from the closing table without putting $1 in the deal, and as long as I ran my rehab numbers right, I don't have any money out of my pocket through the whole project. I don't have to worry about covering draws. I get all my money up front. I don't have to worry about leaving skin in the game. I don't have to worry about any of the closing costs. It's all wrapped in, guys. Even my insurance is sometimes paid for up front. So that's the benefit of working with a private money lender. So there's a lot more benefits to work with a traditional private money lender in the sense as compared to a hard money lender. So if you're out there in your REI clubs, or you're on social media, this is a really big problem, right? You're on social media and they're talking about, I'm a private money lender, and here, check out our rates, right? They're hiding behind that term private money lenders. Technically they are, but they're not a real private money lender like you hear people talking about. You need a private money lender. Because if they're asking points up front, and they're asking origination fees, and they're asking for a long, stringent interview process to get that money, they're a professional lender making you think they're a private money lender because you're new in the business, you don't know any better, right? And so you're going to go do it, and there's a lot of them out there on social media, and they're all over the REI club, so just be wary. They're really hard money lenders, and they're really professional lenders. So after all that, is there any reason to use a hard money lender, and what is the benefit to using a hard money lender? Well, I think that there is benefits, and here's why you need hard money lenders. You may not have any private money lenders, right? And you have to use them. Or you may have some private money and you run out, which is a good reason that hard money lenders are there, because they don't really run out of money unless they're not good at what they do. So they have more money, they can fund more of your deals at a time, and they're not likely to run out of money. Whereas if you're borrowing from a friend and he's only got $200,000, and you have 2 deals for $100,000 apiece, and then you come across the biggest home run deal of your life, and you don't know any hard money lenders, and he won't fund it because he has no more money, you're going to have to let that deal go by, or wholesale that deal, right? So, and you don't want to see that happen, right? It's not fun to have to wholesale a deal for $15,000 when you could have made 40 flipping it, right? And another reason hard money lenders are good is they're just professional. They understand the business. They were rehabbers at one point, and they understand the speed of the transaction. So they can do things quickly. They don't run out of money, and that's one of the good reasons. So we do use hard money lenders in our business from time to time. We try to always use private money lenders for the reasons we talked about, not having to bring money to the table, not dealing with draw reports, not paying points up front. So I hope that helps, and I hope that's a good breakdown for you to kind of understand the difference between a professional hard money lender and then a traditional, in the sense, private lender. So if you have any videos that you want us to film or any questions that you have, go ahead and put the suggestions in the comment box below. Like this channel, subscribe to the Army, join the community, because we're going to have a lot more videos coming out here over the next couple of years for you to help you in your business grow and get to where you're trying to get to quicker. I hope that helps, and I'll see you on the next video.